if you're opening up your end of first quarter 2024 broker or investment account statement and you're noticing that you had a great quarter, first of all, congratulations, great job. But you may also be wondering, hey, what could be in store for the second quarter? What are some of the opportunities and risks? I've made several videos over the past week about some of the opportunities we see in the second quarter, including in the energy sectors. I want to quickly talk a little bit about risk, because I think risk is always, really should be, at least certainly is for us, at the fore of focus. When it comes to the second quarter, and we'll look at some charts here in a second, lots of people are wondering, is it going to be the Fed? Is it going to be economic data? Is it going to be something totally different? And to be honest with you, I don't really know what the risks are going to be, but I can tell you what some of the where the concentration of risk currently is, meaning where people are allocated to. And so for that, let me give you a little bit of idea here. The first quarter has been all about momentum. And so if you look at momentum stocks, we can measure momentum stocks with an ETF that's ticker symbol MTUM. Again, I've mentioned this one here many times throughout the first quarter. And if you want to be very simple about it, and quite frankly, I'm not sure that a whole lot more analysis is needed for this particular ETF right now. We're basically going back to a previous all-time high, and maybe it's some sort of a double top. Even if it's not a double top, right? Maybe it's a pause that refreshes up here. So either way, some sort of a pause, a consolidation phase up here makes a lot of sense. And I think I don't think we know that is a huge amount of market participant concentration from individual investors at home to professional investors like hedge funds and institutionals as well that are crammed into this momentum trade. And so I really think that is going to be the focus or that is where the risk is. Again, I don't know what the trigger is. And again, it could be Fed, could be interest rates, could be geopolitical, could be maybe second quarter or first quarter earnings decelerate the forecast. I don't know. I do know that this is a very crowded trade, and so I wanted to at least make this aware, make everyone aware. The other chart, and I've been talking about this one now for weeks and weeks and weeks, and I think this is the line in the sand. I want to just reiterate it one more time. S&P 500, I'm looking at the SPY ETF here as a proxy to the S&P 500. Look at that yellow line. That yellow line is the line in the sand as far as we're concerned. It is the 21-day simple moving average. Don't make it too complicated, but simple or exponential doesn't matter that much for this kind of analysis. But that is the line in the sand. If and when we break below there, the algorithms are not going to like it. And just like they bought every single time we got to that line, if we were to break and hold below there, things could switch. So this is all basically just another way of looking at the momentum trade. It's the same thing as looking at the MTUM ETF. I could show it to you here as well. The momentum ETF, MTUM, it's a little bit more volatile than the S&P, so you have to give this a little bit more sort of leeway. But again, you can see with the exception of early January last year, and a couple days below that, which is like the first few trading days of the year, that doesn't even count. Those weren't even real trading days. But you can see for the most part, we literally buy every single time we get to that point. So to me, that's the concentration risk. Hope it helps, folks, and we'll see you in this week's research call where we talk about income and how we can generate income from our portfolios, from things like momentum stocks, other things like energy stocks. I'll show you exactly how that works.